AMD is sitting at a critical crossroads right now, and if you are watching the AI chip race, you cannot afford to ignore this stock. Today, we are breaking down exactly where AMD stands, what the smartest money on Wall Street is saying, and whether the setup for the rest of 2026 is a buying opportunity or a trap. AMD closed around $204 at the start of April 2026, sitting roughly 8.9% down year to date, but here is the wild stat. The stock is up over 110% compared to just 1 year ago. That low point came back in April 2025, when tariff fears crushed the stock all the way down to $84. Since then, it has been a remarkable recovery story. So what is driving AMD right now? 3 big things. First, the Meta partnership. AMD signed a massive multi-gigawatt GPU deal with Meta covering the next several years, with the first deployment kicking off in the second half of 2026 using custom MI450-based GPUs alongside 6th generation EPYC CPUs and the Helios rack-scale architecture. Second, earnings. AMD is guiding for approximately $9.8 billion in Q1 2026 revenue, which would represent around 32% year-over-year growth, and the report drops on April 28th. Third, analyst upgrades. Wells Fargo just added AMD to its tactical ideas list with an overweight rating and a $345 price target, citing strong EPYC server CPU demand and AMD's upcoming July accelerating AI event as a major catalyst window. Here is where it gets really interesting. MarketBeat aggregates 40 analyst ratings and shows a moderate by consensus with an average 12-month price target of around $290. TipRanks puts the average target at $285 based on 29 analysts, with the highest target at $358 and the most conservative at $220. Breaking it down by firm, Wolf Research has an outperform with a $300 target. Alethea Capital says buy at $330, and RBC Capital is the cautious voice in the room, hold rating at $230, citing valuation concerns relative to peers. The base case scenario for year-end 2026 puts AMD in the $250 to $280 range, but the bull case climbs to $300 to $330 if the MI450 launch goes smoothly and Helios wins rack-scale deals at major hyperscalers. Now the risks are real. Nvidia still dominates with its CUDA software ecosystem. Gaming revenue is declining, and macro uncertainty, including tariffs and China restrictions, could drag the whole sector lower. AMD is not cheap, but the growth story is very much alive. The next 90 days, earnings plus the July AI event, will likely tell us everything. Watch the 220 level closely. If it breaks cleanly above that, the bulls take control. Stay tuned, and as always, do your own research before putting a single dollar to work. Disclaimer: this video is for educational and informational purposes only and does not constitute financial advice. Stock investing involves risk. Please conduct your own research before making any investment decisions.